Okay, welcome everybody to this evening's Audjpy Securities webinar. So welcome to the Forex Trading webinar series. My name is Duncan Cooper. Before we get into it, if you can read through the disclaimer that's going to be coming up. Before I get into the disclaimer though, tonight is Forex Trading Live Market Analysis. Tomorrow evening we'll be position trading using the monthly and weekly trading ranges, and on Thursday we have more live market analysis. So that's what's coming up from me this week. So as I was saying, just getting into the disclaimer, here it comes. You can read through the disclaimer before we move along. For those on our YouTube channel, I cannot see the chat, so you're more than welcome to watch, or just follow the link that I've given you and you can join us in the webinar and then you can chat to me there. For everybody else, I've got the webinar chat box open. I've got the question box open. Lachlan, I can see your question. So whilst everybody's reading through the disclaimer, I'll read through your question to myself. So like I see your question about trading pairs that are kind of correlated and trading both in the same direction. Well, I'll talk about that when we get to them, but yeah, it doesn't quite make sense because I don't think both can move in the same way. Well, they can move in the same way if there's something fundamentally very amiss, but I don't think it's the best idea, but we'll get into that. I'll get into your question as we get to those pairs. All right. Everybody, if you are new to the webinar, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at Audjpy Securities. And I am a full-time Forex trader. I've been trading the market now for more than 15 years and mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Just send me an email. Through the week, you can connect me at the website, acy.com, go to the market news tab, get my analysis there, or our YouTube channel, Audjpy Securities Australia. And I am putting content through my Twitter and LinkedIn. So if you want to follow me on there, those are my handles there too. If you want to get access to the Audjpy Telegram channel, just contact Nathan Bray. I'll put his details in the chat now. So any questions about anything at ACY, webinars, opening a demo account, live account, just contact Nathan. He'll be able to help you out. If you want to get access to my chart layouts and templates, simply contact Nathan too. He'll be able to set that up for you. So I'll just put his details in the chat there. All right. Just bear with me a moment. I'm having a few technical issues here, so just bear with me a moment. All right, I think I've resolved those. All right, first up, we'll have a look at the news coming out. And my page isn't refreshing, I don't think. All right, so no real news for the rest of the day. We've had earlier in the day the Gbp climate count change, which has come in a little bit more positive than expected. Not as many claiming unemployment. I think the claimant count change is all about who's claiming unemployment. So the figure doesn't seem to have grown. It's actually shrunk a little bit there, so it's positive. And the pound dollar did spike up a little bit, but it's been selling off ever since. Now moving into tomorrow is a key day for news this week. So we got the UK 4 p.m. GDP month on month. But then the more important one, 10:30 p.m. That'll be important for the pound for sure, but more important for the broader market. From the US at 10:30 p.m., they've got the core CPI month on month, the CPI month on month, and the CPI year on year. They're definitely going to be looking at the year on year figure. We're expecting that to uptick to 3.6 from 3.2. We've got the FOMC statement, I believe, coming out in the next week, next Thursday early morning. So market's going to be looking to that data tomorrow to then look to this data next week. All right. So that's the first big news item. We've also got the core PPI data coming out on Thursday at 10 p.m. All right. So just in the next 24 hours, that's the big event. And Thursday there in the morning, we've got the Aussie unemployment. So that'll be a big event for the Aussie. And into the evening on Thursday, we've got the interest rate decision for the Eurozone. Not expecting any change there. So there's a number of big hurdles for the US CPI data, for the Eurozone interest rate decision there. Okay, and then of course the US core PPI data coming out in the same evening. So fireworks on Thursday for sure. All right, so just be aware of those items coming out. Got no way of knowing exactly what the data is going to bring. Sometimes it's best just to be sitting on the sidelines until that data is passed, unless you've got a very profitable position and you can be more than risk-free on the trade. Okay. All right, that's enough of the news. Just make sure you know what's going on from the news front. All right. So as I say, we've got the CPI data coming out from the US tomorrow. At the moment, the dollar index is the weekly look. Slightly negative for the week, but we're holding above this weekly top. Over the last 3 to 4 weeks, we're moving above 2 weekly highs here. And the only question in terms of this trend moving up here now for 2, 4, 6, 8 weeks in total at the moment, how much further can it move, is if you move to the monthly chart, we're actually in a downtrend on the monthly chart. I know we're having 8 weeks straight up, and we could be changing this trend, of course, and moving above that top. And just pausing one moment. Just want to make sure everybody can see my screen okay. Usually you're all telling me if you can't see my charts, but if somebody can just tell me that you can see my charts okay. Just want to be doubly sure. Or just raise a hand. Yep, it's okay, great. All right, so the monthly chart here on the dollar index, you know, at the moment, until we break above this high point here, potentially we could stop and put in a lower top. So it's not a given that we are now in a continued uptrend, because on the monthly perspective here, that range that we can see from high to low is still intact. And the range, when you drop to the weekly chart, is this range here. That's the February high. Okay, potentially, let's get my new drawing tool working. As I said, I have a few technical issues coming on tonight, so not quite as organized as I normally am, but doing the best I can. All right, so, you know, we could, you know, we've moved down this way from the monthly perspective. This could be all rally, and we could actually move back down this way depending on the fundamental data coming out over the next few months, and still maintain that monthly trend to down. So we're definitely at the high end where we could actually stop and reverse. And when we get to the euro dollar, the same thing could be happening there. We could be putting in a bottom to move back up if that's what the market wants to do. So it's not given that we're continuing up. We may have, you know, a shorter, you know, we could actually get a short-term pullback to put in a higher bottom here now on the weekly chart to then move up and through, because we've had 8 weeks up here. So we might need some kind of reasonable correction against that move at the moment. All right. All right, so at the moment, we may well see on the day chart here a little bit of sideways price action as we wait for the data tomorrow. Okay, from the US CPI. But at the moment, I can see here from yesterday's trading into today, we're getting a little bit of support on top of this day chart top, and the inverse relationship is being shown on the euro dollar too. All right, so we could just be a little bit consolidatory, pulling back here before we continue that move up. Now the S&P 500, the weekly trend is still up, but I've been anticipating that maybe we're getting a lower top here forming potentially. We'll have to wait and see. If the dollar index is going to continue up strong, then potentially we may well be seeing the indices pulling back. So are we going to be forming a lower top here? We've had a pullback within that range to the 79% of the major range, a little bit short of the 79% of this smaller range here. But as well, we could be like moving down, rally to move down this way. Now, let's drop to the 4-hour chart. Last week's range, I've got my charts high and low with these dashed lines of the high and low of last week. We've retraced back up inside of the last week's candle to the 62 level, so we could be actually topping out here for this week to move down already. All right, so that's 62 levels at 44.89. All right, so we start to monitor the 4-hour chart for a downtrend forming, and that could then start to confirm the day chart here. Could start to confirm, you know, if we actually have a day down today, break the low of yesterday, that will start to confirm a lower top there on the day chart. So I'm anticipating we could be rolling over here to move down. Okay. All right, let's get into the currencies. So the euro dollar. This is how I had this drawn out at the latter end of last week, looking up here at the 107.65. Now, broken supports becoming resistance here this week at 107.65. Continued downtrend. To the monthly chart, there is a swing low here, a minor one, but it's the similar one shown on the on the dollar index, but inverse. So at the moment, there's the potential that we might not move through that low. If you move through that low, it's going to maybe signal a definite trend change on the highest time frame. Weekly trend has been putting in a couple of minor lower tops here through the lower bottom, or through the higher bottom to a lower bottom, I should say. And this week, that daily level of broken support is maybe putting in the high of the week here. But the major level, if we break 106.35, we're getting a significant change in trend. There's still the possibility that we could just pull up ahead of there. So we have support here. Day support's at 106.67 and monthly support 106.35. And then the newest form level of support there at 106.86. So at the moment, I'm just anticipating the trend is holding. And we failed earlier today at 107.65, and we're just moving down to test these lower levels of support. And the range of last week, there's the high of last week to low. We've actually had a 62% retracement. I'm actually going to take you through that in tomorrow's webinar. 62% retracement. And I would be anticipating that we failed there now. We've had a nice rejection candle. My 4-hour entry method is just trading the break of that candle, and that would already have you in profit. I'm expecting this is potentially moving downwards, depending on tomorrow's data, to test those levels of lower support. Certainly coming down maybe this week. Get my right drawing tool on. Coming down. To test the 106.67 day support level there. So there's the range of last week. I think we've already retraced inside last week's candle to broken support. Now tomorrow's data may see this uptick once more to retest that level, so it's worth still watching for 107.65 to be further tested potentially. That may offer you another opportunity to trade if you haven't been able to trade there today. Other than that, at the moment, if we just drop into the 15-minute chart, now this rundown that we've been having today, I don't like to be selling at bottoms of moves. I would be monitoring the range of the day and looking up to the high level of the 79% level. So yesterday's high point here, 79%, so that's yesterday's high. There's the 79% level. 107.56 is the level of the 79% level. And yesterday's high is at 107.59. So we could see price move back up into that zone today or tomorrow, because we obviously will put a range in today. Maybe we've already done the range for the day and we just trade inside the range of today, and then tomorrow comes around. So we could well see in any event, I would be looking for price to come up to the 62 now or the 79 and look up at those high levels if price can get up there to sell. I don't just sell at the bottom of the day. I'm always looking for a rally sell. So that's what I'll be looking for there. Euro yen is rather difficult, although what I'm monitoring at the moment, the way I've got this fib drawn is across last month's range, but we'll get to that in a moment. So on the day chart, price action here is in a slight downtrend. It is getting some support down here. It's false breaking there yesterday. It actually got support on 157.04 on Friday and closed back above weekly resistance, but then opened down on Monday, further testing support, but rejected. So it's a little bit difficult. What I'm monitoring is this whole area of support here, these two lows, because if we drop to the 4-hour chart, on my 4-hour chart, I'm able to see where last month's high and low is. So the range of last month's candle is here. And often we pull back to the 62% level or the 79% level before we then move up for the month. So you can see here, there's a 62 level, 157.14. And we just pulled short of the 156.43, 79% level. And this is tomorrow's lesson, but now this area potentially is the fib support area of the month, the previous month. And we held them Friday, rejected there, and then rejected again on Monday. So we could actually be getting some support here to trade up. So at the moment, I will be watching to see if this could just pull back to 157.04, 157.100, which is support. 62, that was at 157.14. And can price further get support there this week to then move up? So you could actually draw a fib across this range just here. You drop it to the 15-minute chart to closer look at. And of that range, just want to make sure I've got that drawn perfectly. 62% level of yesterday's move up to then this high early today. Overlaps with your day support level at 157.04. So for me, trading in line with the high time frame trends, we keep getting support down here. That area there, 157.04 approximately to 157.100 is the area to potentially watch for support. That we could be getting support here to move all the way back up the range. We have a gap over here that got formed on Monday. Hasn't been filled yet. So I'd anticipate that we're going to fill this gap. The gap remains there at the moment. So I'd anticipate we would come up and fill the gap back up to weekly resistance at 157.99, 158 level. But how do you get long? So down here would be potentially good supports. Stop below the low to trade up. That's what I'll be looking at there. So at the moment, it hasn't quite gotten down to support. Whether or not it can get down there today, you can monitor. All right, euro pound, not really excited about that pair at the moment. The area that I put out last week was up here at weekly resistance, so to the weekly chart, this weekly area here. Can we come up to the high levels where the sellers have been positioning themselves? Because the weekly trend is down here, so lower top, lower bottom. We've been held false breaking this weekly top. So from the 79% level up to that weekly top there, that's the area where you're going to find the sellers. And the trend is down, lower top, lower bottom. So that's the area I'm just watching on the day chart at the moment. Can we come up to that area? And then what happens up there? You can see false broke there 3 days. False broke there, fell down. So that would be the area that we'll be watching to try and trade in line with the dominant trend if we can get up there. It's rather range bound, that pair at the moment. In fact, it gets rather range bound a lot of the time. So I always try to then look at the outer range to trade that pair if I was going to trade it. All right, so look at the pound dollar. Now to the daily. Azu, hello to you. All right. We're in a downtrend on the pound dollar on the daily. On the weekly chart here, the most significant bottom on the weekly chart hasn't been broken. So you could maybe say this is still holding to a dominant trend to the upside. We pulled back last week to a significant level. This is actually a monthly level of support. Go to your monthly charts. It's this area here. Back to the weekly. That's at 124.47. So we pull back to that level. Thursday, Friday, we pretty much trade at that level twice. So there was potentially an opportunity to get long down there if you wanted to trade on a key level of support. To the daily. So there's the 2 days. Thursday, Friday. So we've tested support. We've moved back up to broken support on the day chart perspective. That offered resistance yesterday. Euro dollar, pound dollar, both working perfectly to broken support becomes resistance. Just like magic. So that is a level to watch to sell at 125.44 if we could retest. Now there's two sides of the market for this pair at the moment, because this is a very strong level of support from the monthly chart, 124.48. We could simply come back down to that level and hold, and it could reverse back up. So there's two sides to trade at the moment. Daily resistance and monthly supports. Trend, though, is to the downside. So we haven't had a shift to the upside in terms of trend. I think if we come back down to 124.48 and hold and break above 125.44, that will be a trend change. At the moment, though, we don't have that. And what we're seeing on the 4-hour chart is of last week's range. There's last week's high to low. We got held at the 50% level. Now, when the news comes out tomorrow from the US CPI, I'm still favoring more to the downside until we maybe get a broader change to the US dollar. We could just maybe just come up, retest that level. We could come up to the 62 level. All right, we could come up to the 79% level of the weekly range. Over here, there's still a little bit of an imbalance that needs to be potentially filled. I said last week that we might come up to resistance and fill this imbalance. So that on Thursday, and that was pretty much what happened. Just like magic, imbalance gets filled, broken support becomes resistance, and we traded straight back down. Now, the 4-hour chart in terms of the major swings, this is in a slight uptrend here. So there is the potential, so there's both sides of the market to this pair at the moment. There is the potential that we're pulling back here. This 79% level may hold because you now have a minor higher bottom, higher top. Are we putting in another higher bottom to try to trade up the range and retest resistance once more? So there are two sides of this market at the moment. So if you're prepared to go against the day chart trends, you can see you're set up to buy here, whatever that might be. You know, is it a trend line break? Is it a swing point break or whatever else you use for an entry perspective? You know, we're getting into the green pivot points here. This could start to hold here and trade back up. So what side of the market are you on at the moment? This particular pair, you could trade either side, or you could be waiting for 124.48 down at the bottom to get further tested and hold today. That could still come down to 124.48, and you ask yourself, what happens here? Today's projected low is fractionally below. So if that was to come down to that area today, we would have done the range for the day. Last week's lows there as well. That would potentially be a good level of support for a move back up the range. So, you know, if I was looking for a long today, that would be my level if price could get there. But it may hold here at the 79% level. You can start to monitor price action there to see whether it starts to give you a clue that it wants to move back up. Pound yen, it is declining down here at the moment, a bit like the euro yen. It's like a slow graze to the downside at the moment. Now the higher time frame trends are up. It's just trying to ask itself, it couldn't yesterday, couldn't move below this level of support here. 183.24. But we are trading below it at the moment. So I will just be watching to see where we close today. We close back above today, we could be getting support here to move back up the range. As well, the range from last month, very similar to the Euro yen. There's a range for last month. We came into the 62% level there yesterday and wanted to trade back above then day support. Day support at 183.24. So it's a little bit choppy in here at the moment. Potentially there's a slightly higher top on that candle there to that top. So we could actually be seeing a little 79% retracement in here, which has just occurred down to the 50-minute chart. Just come down to 79% level at 182.94, 183.00 here. Last week's low there too, so we could be false breaking this area today. Trade back up. You could, monitor for trend line break or reversing back up. We're at the 62% level area, just fractionally short of last month's range, which is often where we pull back to before having the rest of the month up. All right, it's trying to give you a trend line break there at the moment. That line's rather acute, but potentially reversing back up there in the support area. All right, let's move along to Aussie yen. Very range bound at the moment. My viewpoint hasn't changed in terms of trying to trade this pair at the moment. Supports up, resistance is up here. Okay, 94.93 is the higher level. I think that's 94.83 in here. $94.85 to 94.93. That area up there is your resistance at the top of the range. And down here, I'm using this high over here, which is a weekly high for support at 93.03. So I'm just waiting for one side of the range to be met. So it is slightly putting a base in the middle of the range here. So potentially I'm expecting maybe this is moving up here. When I'm just looking at this time frame, I would be watching up there. However, if you drop it to the 4-hour charts, you might see a different picture, slightly different picture. In that, we have a rejection on the last candle. So I'm just going to get rid of that fib across the whole range. Last week's candle, high to low. You can see we're struggling up here at the 79% level of that range, and all this upward movement to this area here, which is around about 94.45. Let's call it 94.50 level. 79% at 94.47. We've just come up and feel this imbalance in here. So you'll see that imbalance. Just got down to my 15-minute chart. That's a little bit. Let me go to the 1-hour chart. All right, there's that imbalance that we've just been filling, where we had this big run down through that day. The last of the imbalance has just gotten filled in here. So you're often going to see these imbalances get filled at the 79% level before then decline. So whilst I would ideally be looking at the top of the range, when we're looking simply at last week's trading range, this could be where we're also looking for the market to top out. And you can see we've just heavily sold off on that candle. The last 1-hour candle came up to retest the area to trade down. So that would be a good area to watch to see if we can get another test today. When we get I just want to go back to my news. When the Aussie unemployment change comes out, unemployment rate Thursday morning, then I will be looking to the top of the range potentially, because the volatility may move that up to the top of the range or to the bottom of the range, which is down at 93.03 down here. Okay, but in the short term, where it's not too volatile, as we wait, a good 24 hours for the major news to come out. We may just come back up to that level, 94.47, and that's the level to watch, maybe at the moment, from one intraday day to the next to find your resistance. All right. So watch up there at 94.45 approximate level. That's where the sellers are coming in at the moment. You can see it getting capped over the last 2 days at that level there. Friday, Monday, false broke there just a little bit on Tuesday. Aussie dollar. Now, almost like the euro dollar, pound dollar, we've almost moved back to broken support. That's actually a monthly support area here that got broken. 64.58 is the level to watch. A couple of fib ranges to monitor. So I've got a fraction short that level yesterday. There's that range there. 62 level overlaps perfectly with your broken monthly support. This is a downtrend here to a lower bottom. Are we coming up for a lower top here? The 4-hour chart, if you just monitor the range of last week, then there's a 79% level in this almost the same area. 79% fibs at 64.53, 62 levels 64.58, monthly resistance at 64.58. That's the area to watch. Now we may have already topped out there yesterday, time will tell, but I will be watching to see if we can come into that area up there. There's still a little bit of an imbalance in here that hasn't been quite filled. Bit of volatility coming in the market, especially when we get the Aussie unemployment figures. We could come up into that area just to complete any remaining sell orders up here that's sitting there. Okay, that's where we'll be watching. So I'm just being a bit patient on some of these at the moment, waiting for the best price. When the US CPI data comes out, we could just spike up to that level. From a higher level perspective, the day chart range here as well, we could actually spike up to the 79% level up there. 64.90 is your daily resistance level here. Some more levels very close to that area too in there. So and that would then form maybe a little head and shoulder, left shoulder there at 64.58, head, potential right shoulder up there, around about the 64.90 level. Now, Lachlan, your question was, you're hoping the dollar CAD will rally back for a sell because it's false broke that weekly top area, hasn't it? And also hoping the Aussie will rally a little further before it continues down. So, of course, here I'm suggesting this could rally to go down, but that would be in opposition then to potentially what the dollar CAD could do. So, if you're looking at the dollar CAD for a definite short, potentially then the Aussie dollar could rally higher up. And I'm not unopposed to the Aussie dollar rallying higher up from a technical perspective, because we are, if I just tidy off, that fib range. If you move to the weekly chart, potentially we may be putting in a top here, but we've had this large move down from a double top. So there's every possibility that we could want to move back up at some point, all right, because we've had this move down. We could, if we see some US dollar weakness, depending on the data releases, this could come up to do that over the next month. We are a little bit overextended down here, but that is more than a possibility. So if that was to occur, then yes, the dollar CAD could most definitely do what you're suggesting. But I don't think both can work, because those two pairs are highly correlated. So if the dollar CAD sells off nicely, we're going to see this Aussie rally. So you need to bear that in mind. All right. Sento, you're asking me, are you the only one? So you're saying, am I the only being able to see the bottom of the page? I cannot see the chart when you switch to the lower time frame. Nobody else is telling me. So when I switch to a lower time frame, everybody, can you see my lower time frame charts? Okay. Lachlan's telling me he can. So, all right, I've got 2 people saying that they can, Sento. So it must be something at your end. All right, Steve's telling me it's all good too, so I don't know. Everybody's telling me it's all good except yourself, so it must be something at your end. All right, so at the moment, I'm looking at this Aussie as a potential just a rally within this range, okay? But depending on what the news brings, we might get a higher move, and that wouldn't be, you know, a large stretch to see some of this range here get reclaimed. So at the moment, working with a smaller range, but we'll have to wait and see what happens over the next week. Right, it's moving to the New Zealand yen, which that's how I drew it out on Thursday. It doesn't take too much explanation. We're in this range at the moment, and we almost got up on Friday to the top of the range that I'm using. I'm using this high over here that the market's been referencing. It's a weekly high, and I'm using this day chart support low over here for the range. All right, got a fraction short of the range. Maybe the range is coming from that high there, so I could actually just readjust. 87.23. Market maybe just moving to the more recent level, 87.23. That's where Friday pretty much touched. And then I can just put my fib across that range to the 4 hour. So now my top of our range is there and the bottom of our range is there. As I was saying last week with my range trade method, I look to sell at top of the range. So I look to sell at top. So as I've established my range, I look to sell here. Stop goes at the 127R to then trade down. Or if you come to the bottom of the range, I look to buy. Stop goes at 127 below. Then looking to trade upwards. Now, we failed at the top of the top of that range area there on Friday. At the moment, we're sitting right in the middle of the range where it's the worst place to be as a trader, in the middle of the range. So I'll just monitor the outskirts. Can price get back to the outskirts? Can you trade up or down from the outskirts? That's what I would look at there. All right, New Zealand dollar. This is how I had it mapped out on Thursday. We filled the imbalance here. That's the range of last week. This is my 4 hour chart. And we filled the imbalance, got a little bit short of the 79 of the range, and I'm anticipating maybe we could still come up to the 79% level of the weekly range when the volatility of the news comes out tomorrow. Or go to the day chart. We could be like, there's the larger range in the day chart. We could come back up. Like I was saying on the Aussie dollar, if you want to be, you're always going to get the best trades and the better results longer term if you're waiting for the major levels for price to go and retest. This isn't a downtrend, so from a seller's perspective, the best level to watch for is that broken level of support here. That's monthly support broken. We've tagged it 3 times. They then dropped down to a lower bottom. 79% level perfectly overlaps up here with your 59.84 resistance level. So 59.81 is the 79% level. 59.84 is the resistance level. I'd just be patient, waiting to see if price comes up to there. That's the most perfect selling level on the chart at the moment if price can get there. As I said though as well, if you're monitoring last week's range, there's last week's range. Been a little bit short of the 79. Now we may have already failed there. You could wait to see if price can just maybe meander back up to say the 62 level. or the 79% level, but you pick your level, and you could be putting your stop above last week's high on the basis that price action can't go above last week's high. It's just trading back inside the range to then trade down for the rest of the week. It could have already topped out up there, but you can't go back in time at the moment and trade at that level. So on the 15-minute chart, looking at yesterday's high to the current low of today, looking for an opportunity to sell would be up here. 79% level, 59.27. Could even get up to try to test, yesterday's high up there. In that area, if price was to get into that area today, then starts to hold, that would be a good level to look for an engagement to the short side. All right, dollar Canadian. Now, Lachlan, there is a potential from the weekly chart perspective that we are maybe failing at these weekly highs. The monthly range, we're at the 79%, just a little bit short of the 79% level. In fact, we actually touched the 79% level. So there's the monthly range. 79% level got touched. We got these weekly highs to the left here that we've traded into all these highs. A few pips short of that one. Folks broke those two highs there. It is a very good area where we could get a shifting trend. When resistance here, moved above, sat on top, broke below, became resistance, resistance. This price action, as folks broke that area. Now, we still have a day chart trend though, which is up. So there is still the potential, and we're sitting on the 62 level of the range. There's a potential at the moment for that just to be a pullback to find the buyers. All right. In fact, we've got two 62 levels, the minor one and the larger one, all sitting on top of each other. That's why we're holding here. So there's a potential that we're simply pulling back within the day trend to find the buyers, to gather some steam to push further through. So luckily, if I was watching this for that reversal potential, I mean, there's potential this is just going to carry on up and through, or if we have failed up there, then I would be dropping to my 4-hour chart. Looking at the fib the opposite way. And monitoring what happens up here on a retest. We do have some 4-hour tops to the left here. So if you're looking for the retest to hold, 79% levels at 133, so is at 136.65, 136.54 is your resistance level. That would be the area to watch for your sell. Retest failure. All right. I'm sure that's what you're looking at already. But as I said before, I don't think, can't be shorting the Aussie dollar and shorting the dollar Canadian both at the same time because they're too highly correlated. In my mind, that can't work. But unless there's a significant fundamental shift somewhere that will just impact the dollar Canadian, maybe oil significantly strengthens, that would mean the dollar Canadian could then go down. All right, getting to dollar franc, holding to its uptrend. It's just in a very horrible area at the moment of daily support here and weekly resistance. So on a weekly chart, there's a weekly resistance area over here. We've been, the big swings are still in a downtrend. That's lower top, lower bottom. There's a very minor higher bottom in here. It's just a minor one at the moment. And all this move up has been reclaiming this imbalance that's in here. And you can quite clearly see on the 4-hour chart. Sorry, you can see it on the day chart. There's the imbalance that we've formed. And all this price action has been moving back up to refill this. And this is a very common kind of price action structure where you get a massive drop over 4 or 5 days. And then over a long period of time, we start to reclaim that drop. So that weekly level at 69.26, that's really the level to watch. Yesterday, that's where price came in and put its high. Of that range, we are potentially at the 62% level. Like I said, on the dollar index, the monthly structure on the dollar index is still a downtrend. And if we can't take out the lower high, we could simply put in a further lower high over time. That would mean then that the US dollar is getting weaker, and this dollar franc would maybe hold here and trade back down from the 62% level. So this is holding its uptrend. It's just in a terrible area though, a very tight area between daily support 89.01 and weekly resistance at 89.26, like 25 pip range. So yesterday's range, let's just have a look at the 15-minute chart. Yesterday's range. Now, if a pair's only doing something like 30 pips, it's very difficult to make a profit intraday trading or day trade, end of day trading, because it's very slow going at the moment there. As you can see, the dollar franc, I would look to a different pair. I will just be monitoring at the moment to see whether maybe we do top out here. And are we seeing, there's a downward leg move. Here's a corrective leg at the moment. Not corrective if we move above that high. At the moment, it's still corrective. And do we start to top out here and start to see a signal that we're going to maybe put another leg in down that way? All right. So at the moment, with it only trading in like a 30-bit range, I'd leave that alone. But it's worth just monitoring and seeing whether we start to get a turnaround to the downside with the longer-term trend on the monthly chart. All right, so dollar yen. These are the lines I had in on Thursday. So at the moment, I'm just monitoring to see if it can come back to support. This is very overextended at significant historical monthly price point. It's testing that monthly high to the left back in 1996 at 147.68. So very historical level that we false broke, testing it last year. We could hold there, and this is where intervention's been coming in from the Bank of Japan. We did drop down on Monday. I think the yields on, I think, the 10-year government bonds may be rising a little bit. And more importantly, I think the Bank of Japan's coming out a little bit and jawboning, saying this is way too high. So we did see a little bit of a drop down. There's a weekly chart at the moment. We're just having a week down. Trend here is still up. Key area to watch at the moment, if we start to get any kind of sell-off, we do still have an uptrend here on the weekly chart, higher bottom to a higher top. Here's the key level to watch for a buyer's perspective. Like if we're going to continue up, as we get to the high points on the chart, the Bank of Japan's most definitely going to keep jawboning, or that, saying we're way too high. And they could come in and intervene. So getting caught buying too high up is probably not the best idea as a trader. Steve is saying could be a potential double top. Yeah, it could be on the monthly chart there, but it's going to be we're going to need a bit of time for the market to prove that. But ultimately at the moment on the weekly chart, the day chart, we're still in the trend to the upside. We're only seeing here a retracement of that range. And the drop down yesterday has just come back into where we would normally fraction short of the 62 level. And the week before, you can see we got strong support down there on the weekly top. So look into the long side still at the moment till the structure changes. But, you know, as a buyer, getting in at the low levels, not trying to get in at any high levels. All right, so we did have the drop down. A really good level would be that weekly level down here at 145.06. So just back to the day chart. That weekly top here, 145.06, is pretty much in line with the 79% level at 145.17. So if you're prepared to be patient, if we could dip down to that level, you can see where the support's been coming here and here. That's where you'd expect support to come in. So at the moment, I think I would just be, with the news coming out from the US tomorrow, depending on what that does, if it creates some kind of US weakness in the short term, you know, the level to watch is down here for potential support still. Even though the Bank of Japan could be, you know, talking about we're too high, so on and so forth, the interest rate differential supports the dollar yen. All right, so until we get a major shift in that, or unless the Bank of Japan comes in and majorly starts to sell the, you know, majorly starts to come in and intervene, then I think looking for a deep dip, opportunity to buy down there at the 79% level if price can get down there. Sometimes with a pair, you have to be prepared to wait for the best level in the environment. And if it can't get down there, it doesn't get down there. But that's the safest option if you're wanting to trade the dollar yen at the moment. All right, now, if we were to clear out these lows with a downward movement, okay, through the week. So if we were to move through these lows, then of course things change, and then you'd be looking to sell a rally. But at the moment, until we break these lows, the clear area to watch is that 79% retracement and support at 145.06, weekly support there, if price can get down there, okay? All right, gold. This is how I had it on Thursday. Really, I'd still be watching for the same thing. There's a possibility there you could trade to the upside. The dominant trend at the moment on the weekly perspective is lower top, lower bottom, with a further lower top possibly forming here. We're just kind of sticking on top of a historical high over here, 1916. All right. So of this range, we've had a pullback to the 62% level. I'm expecting, just move back to the weekly chart, I'm expecting that we're putting a lower top here on the weekly chart until proven different and trading down and through. In the short term, this day chart is getting some support here at 1916. So that is just a difficult level for the sellers. Sellers can't move it through there. You can see on those day chart candles, the wicks at the top. So as price is moving up, it's getting met by the sellers. And I don't anticipate 1916 will break until maybe the CPI data comes out tomorrow. Well, if it's going to break, you know, a news event's going to break it, and the market doesn't want to, you know, commit to moving below that support level before that news event. So it's rather difficult at the moment. I can see on the 4-hour chart that there is a low level uptrend on the 4-hour chart. Potentially a higher bottom, higher top, slightly higher bottom, another higher top. You could be monitoring that range to the upside. It's in the 79% level at the moment at 1919. That could be where you start to maybe monitor on the 15-minute chart. Do you see a reversal to the upside here on the 15-minute chart that you want to trade? It's at the 79% level of the 4-hour range. You know, unlikely that it's going to move through 1916 ahead of the news event tomorrow. So if you're wanting to trade gold, it is looking like this is just kind of slight grinding up there on the 4-hour chart at the moment from support as it waits for the news. All right, so that's my thoughts on gold. All right, I'm just checking my questions. I think everybody's questions have been asked and answered. I think so, yeah. All right, any final questions before we conclude tonight? Tomorrow I'm going to be going through the seminar webinar page coming up from me this week. All right, tomorrow precision trading using the monthly and weekly trading ranges. I've touched on that a little bit. That's tomorrow's webinar, and more analysis on Thursday. Somebody wants me to look at Frank Yen. Well, Frank Yen's in a good strong trend at the moment. Or last time I looked at it was. So the monthly's up. The weekly is just having, you know, a week down this week at the moment, but that's still higher bottom, higher top. And there's a minor downtrend. Really, if it's going to move down to the downside anymore, it would need to break that level of support. Yesterday, you can see that it held there. Support 164.028. All right, and maybe putting in a little bit of a higher bottom just here on the 4-hour chart. So I would, you know, the level to watch. High time frame trends are up, even though the day chart is slightly down at the moment. Really, the level to watch is that 164.02 level on the day chart. That's a level where you could be looking for buying. If we break that level convincingly, then that level may then become a resistance for a deeper move down. I think I said this before on the weekly chart. If we do get a deeper pullback, I would be watching a pullback to this weekly top here. 161.64 there is the weekly top, and then the 62% levels at 161.58. All right. That's a long way away at the moment. So the major level to watch at the moment is that 164.02 level. Is that going to hold us support to trade back up? Okay, hopefully that helps you on the Frank Yen. All right, everybody. Hopefully you got some levels there that you can work with. Of course, market might not do too much while we wait for the US news, well, 2 days really. CPI data Wednesday, PPI data Thursday, 10:30 p.m. both days. All right, it's going to be very volatile at those times. And of course, we've got the Eurozone interest rate decision as well on Thursday. So it is a very risky environment over the next 2 trading days at those times. All right, around the 10:30 area on both evenings. Wednesday, tomorrow. Thursday, same time. All right. So, you know, buyers and sellers beware at those times. It's going to be very volatile. Market's very much driven at the moment with inflation, interest rate decisions. All right. And what one trend is at the moment can suddenly shift to a different trend if the data, when it's released, isn't what the market's expecting. All right. So the best thing to do around those data releases is do nothing and wait for a setup after the data release would be the safer play to do. Okay. All right. Thanks, everybody. Look forward to seeing you next time.